We've entered a new week, but the headlines have a familiar theme. Now it looks like Silvio Berlusconi will be the latest political victim of the Eurozone debt crisis after George Papandreou stepped down as Greek Prime Minister. To help us figure out what this means for currencies, I'm joined by regular Dukascopy TV contributor Stephen Gallo from Schneider FX. Stephen, are we back in an ugly contest between the major currencies?
Well, I think at the moment, overall, what you're seeing in the currency markets is, market participants are assigning risk premia to some currencies and liquidity premia to other currencies. So, in as much as the situation fiscally and macroeconomically in the United States has not improved, really, it's still quite weak. The dollar is benefiting from a liquidity premium in the sense that market participants and investors are willing to pay, they're willing to pay up to a degree to park money in the liquid and deep markets of the U.S., including the U.S. Treasury market. So that's reflected in the value of the dollar, and then obviously in the euro. I mean, especially if you look at the value of the euro versus sterling, sterling benefits from a liquidity premium, whilst the euro is weakened to a degree by an ever-increasing risk premium. So I think that's essentially what is driving markets at the moment, other than political headlines and news about the political situation in Greece.
Could the euro benefit from the sovereign wealth funds of the likes of Russia and China buying euros to be part of the bailout fund?
Yeah, I think it could. The difference between now and 30 or 40 years ago is that there are more alternatives to the dollar to diversify into over time. And I think overall, Asian central banks and policymakers in Asia will still want, that ability to diversify away from the dollar at times, or perhaps even more structurally on a medium-term basis. So I think it would lift the euro if they were to announce that, simply because I think a lot of people realize that it is in their interests to have a vehicle to diversify into and away from the dollar. Having said that, though, the political situation in the Eurozone is so bad at the moment. I think the situation in Greece politically is compounded by the brewing political crisis in Italy. The political situation is so bad that they may wish to stay on the sidelines until something manages to improve the political situation, or indeed we see less distress from a political perspective.
When this package of measures was announced in Brussels, I spoke to Soc Gen, and they said euro-dollar could reach as high as 147. We obviously didn't see that, but if we factor in possible downside and upside risks, what sort of range can we expect the euro-dollar to move in?
I think the move by the ECB last week is interesting. It was an interest rate cut, but if you look at the level of the euro that we've been seeing for the last month or two or so, when those rate cuts, the potential for rate cuts started to be flagged by Trichet back in September, the move to price in 50 basis points of rate cuts ensued from that point forward. So I think the rate cuts are largely in the price already of the euro. But I think the move last week by the ECB is another reminder that the central bank is ultimately going to have to be there. It's going to have to stand in the way of political distress between the core and the periphery, like, for instance, that we're seeing between Greece and Germany now. So my view on euro-dollar is that we will see at least one more aggressive move lower in the euro before the end of the year. We may even get that move in the next week or so. But I think because that will coincide with fairly aggressive widening of, Italian, perhaps even also French spreads as well, I think the ECB is going to have to come in more aggressively, and actually that will prove to be a near-term positive factor for the euro. So when you combine the fact that, the other side of the equation, the dollar side of the equation, is still very weak, we're looking at the potential for more QE in the United States. It doesn't seem too surprising to me that we're still in a 135 to 140 range or so in euro-dollar. But again, I caution that we could see another aggressive push-up in the dollar at least one more time before the end of the year. But I think if that move will coincide with eventually, the move will coincide with some very severe distress in key euro area countries, forcing the ECB to do something more aggressive.
Stephen Gallo, as ever, bringing you some quality insight there. We'll stay on board the Eurozone roller coaster here on Dukascopy TV to keep you informed of the latest developments. But for now, goodbye.